you have the audits in front of you. The larger book, that's the actual audit report. The one that's about 100 pages. The other one is just the management report. So we'll briefly go through the audit report, and then the smaller report has more graphs and charts and comparative history. So in my opinion, it's much more valuable information to you. But if in the audit, if you go in, it's going to be on page 2 at the top. It's about 7 physical pages in. That starts the independent auditor's report letter. And basically what this tells you is the first section there gives the audit opinion. We feel the financial statements are fairly presented in all material respects. An unmodified or a clean audit opinion. You guys present the light power in inclusion with the city audit. And then the top of page 3 gives the responsibilities. Management or the city is responsible for the preparation and fair presentation of the financial statements, so they are your financial statements. The responsibility of the auditor is to express an opinion on the financial statements based on the audit. And so that's kind of the differing. Our piece of the audit is the opinion letter. Your piece of the audit is everything, or the financial statements is everything else. Just kind of because there's some new wording in here, if you would lay the audit report letter next to 2020's report, you're going to see some differences. Biggest is more so the format or the layout. We start with the opinion now, that you see kind of middle of the letter. The next section that really has a lot of the changes is the auditor's responsibilities section. One of the things, just because we've been out and I've seen a couple councils now, one of the questions is the last bullet point towards the bottom of page 3, kind of what does that tell me? And basically, they brought something from private industry into government here with this. We've always had the responsibility to take a look at the ability of the city to continue as what we call the going concern issue. Will the city exist in a year from the date of the financial statements? A couple years ago, they added it into the auditor's report on the privately held companies. It had to be referenced. In our world, it only had to be referenced if there was a going concern issue, if we felt the city wouldn't continue past 12 days or 12 months from the financial statement. Now we have to reference it either way. So what that tells you is we didn't determine there was a going concern issue. We have no reason to believe the city of Medelia will not still exist in 12 months from the date of our report. And then the next section on page 4, the next couple sections just kind of defines a couple different of the parts of the audit and the levels of opinion. So that gives you the auditor's report letter. The other thing in the audit report that's to point out, if you go way back to the back, pages 80, 81, 82 give you the internal control letter. We don't actually audit your internal control structure. We have to evaluate it in the audit process. Anything that comes to our attention must be brought to your attention. There's 2 findings that are listed, and they're going to be on page 82. They're noted as significant deficiencies, so they're middle of the road audit finding. Material weakness would be the highest level, and a control for deficiency would be the lowest level. The 2 findings are the fact that the city did not prepare their own financial statements, and then the lack of separation within the accounting of the city. You guys have decent amount of segregation. True segregation of duties is going to take a staff of like 6 to 8 people to keep each of those varying tasks separate.
If you guys want to approve that tonight to hire those extra people, I would really like that.
Basically what they want to see is, somebody who initiates a transaction, can't record it, can't reconcile it, it's all those different pieces. And right now you have some overlooks, but not that perfect world out there. And then the 83, the last page in there, gives the report on Minnesota legal compliance. And there were no findings in relation to Minnesota legal compliance. And that is looking at some of the different state statutes and stuff that govern the city, and making sure you guys are complying with those things. So that's the audit on a very high level. there's the varying sections within there. In the front of it, starting on page 16, 16 and 17 are what we call the government-wide financials, so they show the city as a whole. And then we go into the fund financial statements, so it shows each of the varying funds of the city. When you look at 16 and 17, it's going to show the city taking into account all those long-term assets and liabilities. When we get into the fund financial statements, it's looking at things that we call near term, so what happened in the fiscal year or in the first 60 days outside of the year. And then if you go into the other report, that's the one that's got more valuable information to you. So the smaller report is going to have some graphs and charts. And a little bit more comparative. Your audit report is a single year, so it doesn't give you any of that comparative detail. So the letter that's in that other report is what we call the governance letter. We're required to communicate to those charged with governance or the council in relation to the audit. If we had issues during the audit process, they'd be told to you in that letter. There were no issues. You had no changes in accounting. And then if you skip back into the first page that has the graph, page 1, it shows the general fund, the revenue piece. So when you look at your revenues, the intergovernmental revenues have the most fluctuation over the last 4 years. Your property taxes have just a steady increase over the 4 years. The intergovernmental revenues make sense to have a little bit more variation just because of some of the COVID funding and stuff that cities have received the last few years has kind of skewed that a little bit. Your charges for services is another one that due to the COVID, that's where you're seeing some variance there. You can see 2020, the charges for services were much lower than what they were in 21 and 2018-19. That would be where Gulf revenues and or the pool would have been. So obviously those departments having the closures in 2020 is where we're seeing that dip. Your investment earnings seem to be in line. Obviously 2021 was not a high year for investment earnings, and that's what we're seeing there. And then the other revenues there. So really, outside of those couple COVID issues, everything else looks pretty in line with what we would expect there. On page 2 shows the revenues as a percentage of total. And so what this really tells you is why the city needs to have strong reserves at the end of the year. About 40 or 76% of your revenues comes from taxes and LGA, or intergovernmental revenues. And so those funds do not come into the city till 6-7 months into the year. So you need enough cash at the end of the fiscal year to operate those first 6 months into the next year. Then on page 3 shows the expenditure side. Again, a little bit of fluctuation in a few of the areas due to some of those COVID closures. General government, you've had a steady decline. Public safety has had a little bit of fluctuation. Some of that can be explained by the fire department having less activity in that COVID year. Public works has stayed pretty constant. Culture and rec, again, that's where you're going to see the golf and the pool and that effect there in 2020. And then the other areas are pretty in line. One of the biggest ones when you look at that last one over there, the capital outlay. So in 2018, you guys had a larger project that was run through the general fund. So that's kind of where we're seeing that higher amount there. And that would be those major purchases that the city makes. On the next page shows the way you use the funds and which areas. What I usually find in small cities is the top 3 are going to be general government, public safety, public works. It's just a matter of who's spending more where. So you're right in line with what other cities your size are. Those top 3 are also kind of your top 3. Culture and rec is a little higher than other cities due to having the golf course and the pool there. Some of the other cities similar size do not have those, so that kind of makes sense. But public safety would be the largest at 33%. General government was third at 19%, and public works was 21%. Page 5, what that tells you is the city had a decrease in fund balance, just over $800,000. Part of that has to do with funding the project for the new city building. In the bond agreement, there was a contribution from city funds. Was it $805,000? Okay. And so that we moved that money out of the general fund into that project fund for that purchase related to that bond agreement. And so that's where you're seeing that dip. Without that, you would have had about an $80,000 decrease. That said, the city did put aside extra funds. You'd see some of those other project funds have an increase. So it's just the general fund. You took money out of there and you're putting it aside for earmarks for other purposes. The current unassigned fund balance is $1,829,176, which represents 77.9% of 2021 revenues. So that is how much you have left at the end of the year. That's going to give you cash or available resources to operate into the next year. The state's target range there is 35 to 50%. A lot of bond rating agencies like to see that closer to 75%. So when we were going through things, Chris really was like, I want to see 75. So we hit 77.9%. And that was, like I said, still being able to take some of the funds within general fund and earmarking it for future purchases. Page 6, the top there gives you that graph. So what that is looking at that unassigned fund balance in relation to the next year's expenditures, or in the case of 2021, in relation to the 2021 budget. Again, that 75% is kind of where the city wants to see things to hold that strong bond rating forecast. And in the 2018, 19, 20 years, you were maybe a little high or didn't have enough of it earmarked, so that's where we're seeing that larger dip in 2021. It's not that the city necessarily spent all those funds down, it's just we've taken them out of the general fund and given them a purpose. So on page 7 shows the fund balance of your non-major funds. So the page 8 is where we're going to see more of the infrastructure fund. So the capital equipment fund, the kind of towards the middle there, we went from a $330,000 balance in 2020 to a $392,000, so about a $60,000 growth there. In addition, some projects were run through there and covered. And then the 2020 city building, second line, that fund has $3,251,000. Of it, $805,000 is the city's contribution. The remaining is the unspent bond funds. Page 9 gives the water department. So this shows the comparative history on the water side. The operating income has steadily increased over the 4 years. And then your change in net position, the middle of the road there, that would be the overall profit or loss in the fund. And you can see it was going on a positive trend, and then we had a transfer out in 2021. So kind of if you'd add that back in, because those funds were set aside to be able to have those future purchases, you would see a little bit of a dip in 2020, but not drastic. Page 10 gives...
Can we go back for 1
Yep.
second? You said something that kind of got my attention. You said unspent bond funds.
On the project, yep.
Yes.
We accepted the bond that bond for the building. We accepted that in, so that is sitting there, so while the project is going on, we're spending it down.
okay.
So you
Yeah.
issued the full face of the bonds, and then
It's allocated, just not necessarily obligated.
well, no, it's obligated.
It's obligated, it's not going anywhere else, it stays just directly.
But it hasn't been executed.
You haven't spent it all yet,
That's
so
what I'm
yeah,
trying to
You,
yep.
you are spending it whenever I bring, one of those flag certificates in for like a pay request,
Got
but
it, okay,
it's a different scenario.
sorry, using the wrong vernacular.
Yeah, there's a lot of,
Yeah,
Yeah,
I
so,
appreciate it. Thank you.
so those funds would be considered restricted due to the bond requirement to use it towards that purchase, and that's the amount that you're
They just haven't been
basically.
spent yet.
Yeah, the bond came in all up front, and the payments are going out
Got it.
based on the
Got it.
completion of the
Okay.
project.
Yep.
And then on page 10 is the wastewater, fund, and again, that operating income, there was a pretty high, operating loss in 2018, and it's kind of come back around, and you're on the positive swing there. The change in that position again is that overall increase or decrease. 2021 we had that transfer out to move some of the funds back over to the other funds of the city.
can I just make a
Yep.
comment on both water and wastewater? I also want you guys to understand that you see this positive increase, but those new bonds for the water tower and for the, chemical building, you didn't have a payment, you have a payment this year, so you're gonna see the decrease in the revenue, next year, because those bond payments will be coming out.
Did you have interest payments in 2021 on those? Partial maybe?
Partial interest payments, but not the large.
So you guys have gone ahead and increased rates so that you're able to make these payments
Exactly.
as they come due, so that's why you are seeing that higher.
Yep. So I just want you guys well aware of next year you will possibly see a decrease or to be able, be balanced basically.
A level off there.
Yeah,
And yeah, you can see that bonds payable, the bottom line there has increased over those 4 years, so it's taken into account those new bond obligations. And then page 11 gives the liquor fund. And that income or loss before transfers, that is the one that the state looks at as far as is the liquor fund operating into a positive. In 2021, it was $53,695, down just over 10,000 from 2020. But again, 2020 was the savior for most liquor stores. It was the thing that helped a lot of liquor stores. And so, seeing that you kind of bounce back down, but still are up from where you were prior to COVID, is something to look at. The gross profit percentage there, the fluctuation isn't too drastic. Your amount in 2021 was 25.4%, similar amounts the previous couple years. Any questions on that? You guys do have profit in all 4 years, so and that gives the report. So like I said, that report shows you with a little bit of that comparative history. And with that 53,000, we did move 10,000 over to general fund, so the liquor did fund general fund by $10,000 that year.
Plus, they also paid down their debt service, a little more last year than the year before, right?
no, we stayed at 30,000.
We stayed at 30,000 on debt service,
Yep,
which is repaying that other fund that we borrowed the money from.
yep, so
Water.
30 water fund, yep. So at the beginning of the year, we stood at about 300,000, still left on that.
So right now, we've repaid all our debt service to all our other enterprising funds that we borrowed against, didn't we?
Your interfund loans.
My interfund loans, yes.
Yeah, I believe
As of
so.
last year, we
Yeah.
did. Now this year, we have a new interfund loan in regards to the payloader and stuff like that,
Right.
where we condense the payloader and some of the other equipment from street.
Right. Yeah.
Are there any questions on any of that?
I don't have a question, but I do have a concern, and I don't expect to solve this tonight, but one of the things that I look at, and I hate to say this goes back to my time in the Air Force, when you look at the internal control findings, and they talk about the criteria, the conditions, and things like that, one of the things that concerns me is our city hall front office, for lack of a better word, right-sized?
As far as like I said, to get away from having that internal control finding, you're looking at that 6 to 8 people to be able to segregate each of the duties.
Is there a
so-
balance in between though? 'Cause
Well,
I
and I
don't
think-
think in a town this size, we're gonna get to 6 to 8.
No,
I just
exactly.
think more than 3 is the right answer.
And what's one thing in there are some places where you could have a 6 to 8 person staff and still not have the segregation, because for logistic reasons, you know, in order for it to truly flow, you might have a person down the way who's waiting on something to do because this person has to do their piece first. So that's where you don't find it in a lot of your small to even medium-sized entities, because, you know, that even if you have 6 people, you know, logistically is the thing that makes the most sense for the city. What there is definitely is there's some things you could do or the city could do that's not gonna get you to that perfect thing, but are there separations you could make to make sure you have some kind of checks and balances in place? And absolutely, and some of it is already in place. Years ago, we used to be able to kind of say, well, we know they understand they don't have perfect controls, we don't have to communicate it every year. They took that away about 15 years ago, and we do have to communicate it every year. But that said, you know, there's definitely controls it doesn't mean you have no controls. It just means you don't have what we call that perfect set of controls. You know, and some of them are state statute written, having that dual signature on a check, or having, you know, things come before council for approval and stuff like that. You do have some separation by having, you know, one person doing parts of the accounting and another person doing more of the data entry stuff. But again, you know, it's that perfect set what we're looking.
There's a balance.
Yes. And some cities will put council people into play as far as having some checks. One of the things that, you know, a lot of times comes up when we go into fraud classes is having somebody review a bank statement before it goes into the hands of the people who control the money. You know, just somebody simple. If I am the one spending the money, or in control of the checkbook, so to speak, if I know someone else looks at that statement before I get it, it might stop something from happening there. You know, and it's not even that you necessarily have to know what you're looking at. It's more of know what you're not supposed to see. If all of a sudden you don't see, you know, deposits on a routine basis, it could mean there's issue. So sometimes some cities will put things like that into place, bringing someone from the council or, you know, another department that can just take a second look at things.
So us reviewing our expenditures, that doesn't count?
It absolutely does, yes.
And that's in there, because we all do that every
Right,
meeting.
so the whole internal control finding, that's either you have segregation of duties or you don't. So it's kind of saying, yes, you have things in place, but if you don't have that perfect set of controls in place, you don't have true segregation of duties.
So it's a state opinion, and we're,
Yeah, and they made it added to the report 15 years ago, and
It's not a state opinion, it's an accounting
Alright.
opinion. You know, that there's certain things within your accounting process.
yeah, but the state's telling you how this.
by
should work.
statute you
Well,
have to say
Not
it.
the state, our rulemaking authorities, yeah, but there's certain pieces of the accounting process that you don't want more than one person touching. And if you do, then, like, basically one of the examples is the person who prints the checks and mails them should not also reconcile the bank statement. Well, that happens here. So it's kind of taking, you know, some of those, and yes, you might have someone who does that and this, and then you have someone else who overlooks it, but, you know, you'd need 4 or 5 people in that process where you only have 2, if that makes sense.
So if I was to comment on this in regards to more staff in the office, it would be a person, that would be, basically, would be Heather, myself, and one other individual, for sure.
And that still won't get you there.
No, it wouldn't get you there, but it'd get a better balance.
It'd get
And
a
I
better
would argue
balance.
for the council's consideration, this just puts some science behind the fact we need to take a hard look at how the front office of City Hall is managed, or manned. there needs to be a manpower study of some kind, and I don't know how that works in the civilian world, but I don't think we're at the right place. We're not gonna get to the Cadillac solution, which is 8 people, we're just not gonna get there, we're too small for that.
And I don't want any.
But there's,
Oh my goodness.
but there's a balance in there that we need to achieve, and I think we need to do a scientific study to get to what that is, and I think this just provided a little more science for that, that's all my argument was.
And it's maybe just taking some of those pieces within and saying, okay, instead of having what, this person did, if there's a way you can have, someone come in between in a process, but when you think about it, and obviously Heather and Chris understand a little more, but when you look at like how a transaction flows, ideally the person, one of the other things is whoever sets up a vendor in the system should not also be able to enter an invoice and or pay the check. Well, in a small world, I mean, it's just the access points or whatever. And those are some of the things, and sometimes it's taking, maybe Chris as a person who normally wouldn't have done that and saying, okay, well, we would rather have that control, so make sure, we take her in here at this point and have her be the one to enter a vendor. It's so many different things that could go wrong in the system. It's errors and fraud. Obviously the more people you have involved, if a mistake was made, someone's gonna catch it sooner. And really probably more so on error side. Errors are the one that's harder to find.
I'm not worried about the fraud, it's just the errors, to have somebody else to check the homework.
Yeah, between Heather and I mean, Heather, you honestly do a lot more, but then I come in and sometimes I don't catch the errors until 6 months later. So then you do the journal entries to recode and everything else.
And the other thing too is the more you're aware that it's not perfect and doesn't exist, you're gonna be on the lookout for those errors too. If it's in the back of your mind that obviously we don't have all the staff that we should have, when things come up, you might be more apt to question it too at the council level. So it's kind of just making you aware that exists.
Any other questions, concerns?
So tonight, I do not have it on the agenda, but it would be, if you guys feel comfortable, then we would need to approve the audit as stated tonight. And add that to an agenda item.
To administrative.
Yep.
Number 4. Audit. We should get it.
Just for future reference too, since the MMLP audit is included in this audit, and they receive that same notice of non-compliance, or whatever you wanna call it, and we did change ours, as long as they're operating under the same
Yeah, I mean,
guides, won't you still have to
so,
sign the same letter?
if the city reached a point to where you really like, we fixed this issue and we don't, feel that it exists anymore, you could kind of tweak the finding per se, but yes, as long as you're showing the city as a whole, which includes the light plant, as long as they have it to some degree, it would have to be included. Like I said, you could tweak it to say it only affects this component unit, so to speak, and not the whole city. But that would be.
Because the light plant receives the same letter of Medwood deficiency every audit for the last forever. So.
Got it.
And we issue about 55 audit reports out of our office, and I believe every single one other than one entity, which is a tribal government, and they've taken in every single department person that could possibly come into play, and fix the problem, so to speak. But I can tell you there is some cost that is being lost on account of that, because all of a sudden, for someone to continue on with their job, now they're waiting for a department head out in the field to come in and do a check or something like that. But otherwise, every other city we issue for, and we have cities up to about 5,000 in population. So, it does exist out there more common than not. One of the things, there's been some push for, I don't know if we'll ever get there, is for them to have accounting standards for large entities compared to small or medium size, so that we can kind of say, we operate different, give us the leeway to be able to understand that they're not the same.
Who would set that standard? Is that the state?
No, the accounting standards boards, so, you guys report under government accounting standards, and then there's the financial accounting standards, and then the privately held companies, and so basically, the governmental accounting and the non-public have kind of piggybacked and followed what the public company standards boards have set. So as long as they determine that there's not a necessity, and mind you, I mean, they're issuing 99% of them are large. But, you know, as of now, there was some talk about 15 years ago to kind of get to that point where we have what we call small gap, little gap, and then it kind of fizzled off. So I don't know if we'll ever see that.
Yeah, I think about, the smaller towns with just one individual.
Yes.
One individual in the office that's doing everything. I mean, I don't know how you can start, split that up.
You'd have to have.
And, you know, there's some tweaking within, you know, the finding is written pretty vague. We've left it always kind of as either it exists or it doesn't exist. But Chris is right. I mean, obviously you guys have more than a lot of communities who have a single person office.
Any other concerns?
Okay.
If not, I'd like to say thank you.
All right, thank you.
Thank you.
Have a nice, night now.
Oh, you can just go up the stairs. I know you came through the maze before.
I'll never find my way back.